Well, we promised you that we'd have Cern Basher back at least one more time this week because I'm traveling. I'm trying to find a way, Cern, to roboticize my my videos. So anyway, we you said that you had amazing stuff with regard to the robots, which we covered. That would have been on Thursday. Now we're gonna on Saturday, which is 2 days from when we're recording this. We want to talk about the labor market and maybe some other economic situations. So I will turn it back over to you.
That sounds great, Randy. It's good to be back. And one idea I have is we might want to contact the Chinese company that's making the lifelike humanoid robots and see if they'll make one in your likeness.
And there you go. Well, you don't even have to have that actual bot. You can take your picture now, just one single picture, and give it a text script, and
Hmm.
that picture will be animated to look and act like you, including I even saw some now that are showing a little movement in their hands while they're talking. So it's going to be a long time before they're going to be as demonstrative as I am with my hands. But yeah, they're getting more and more lifelike. Who knows? Maybe my job will be the first one to go.
Well, it'll be fun to try that sometime and see if anybody notices.
That's right.
That would be the true test. Yeah, so last week we didn't touch on this, but in April, 173,000 jobs were added.
Right.
Now, this is an estimate, and the thing we know about estimates is they're wrong.
Right.
The data will be revised over the next couple of months. But it was a lot lower than consensus estimates of about 243,000 jobs.
Hmm.
So the market, had a pretty good rally on this. And if this is correct, if this proves to be correct, then this is a further sign that the economy is slowing down.
Yes.
Um, we also saw that the unemployment rate, which crept up a little bit, is still under 4%.
Hmm.
And we're now in our 27th month of unemployment below 4%.
Right.
And that ties the number from 53 years ago.
Hmm.
So we have to go back that far to have such a stretch where unemployment was so low.
Right.
Now, if we get one more month, if if the next month proves to be unemployment's below 4,
Right.
and we have to go all the way back to the 1950s,
Mm.
it's a 71-year period of time between these two periods where we had such a long stretch. So we're in record territory here in terms of employment and unemployment numbers.
Right. Right.
All right. Another way to slice this is to look at job openings versus unemployed workers on the top chart. Job openings officially is about 8.5 million in March,
Hmm.
and the number of unemployed about 6.5 million. And so we've had quite a stretch of time here where there's been more job openings than unemployed workers,
Right.
officially at least.
Hmm.
Okay. And so, this showing the difference here. After COVID, we had, the drop. There's a lot of restaurant workers and so on, weren't working. A lot of unemployed people, and the job openings dipped as well.
Right.
So we'll see how long this lasts, but you can see the trend here is coming down.
Yeah, and historically, of course, the inverted the inversion has been the case almost always that there's more people looking for jobs than there are job openings,
Yep.
by a lot. Now, I think this is also possibly being somewhat skewed by the way that we get jobs now. So big corporations, even middle-sized corporations now are putting these jobs up on these posting walls, these electronic walls, when they're not necessarily going to hire next week or next month. They're
Mhm.
just like leaving them up permanently, uh, gathering resumes, and then when they need them, they've got them. So this number of actual job openings might be skewed high.
Good point. I think that's likely the case. The other thing that we're seeing too in the employment numbers is that U.S. non-farm payrolls hiring by local government has been pretty strong.
Yeah.
And so the commentary here is that the government payroll number does not seem sustainable. Um, Now, I guess in an election year, then, why not keep hiring? make the economy appear strong. But anyway, we'll see if this is sustainable or not. It's certainly lumpy from time to time.
Right, right.
And then stock and bond markets cheer the weirdest things, but when average hourly earnings go down, perversely, that is good for the financial markets,
Right.
right? Because if earnings were too high, if people made too much money, Randy, then that would be considered to be inflationary.
And also not high productivity.
Yeah, yeah. So it makes sense when you put your economics hat on, but it is kind of weird when you hear about it. And so the year-over-year change now is just under 4%. And you can see the 3-month rate annualized is dipping down pretty quickly. And that tends to be a bit of a lumpy, bumpy number. But that was under 3%.
And
So
and of course, what you're hoping for, and it may seem obvious after I say it, but I don't think it is obvious to most people. What you're really hoping for is you're hoping for productivity to go up. That means you're getting more widgets per hour out of the same employee. That lowers the actual cost per widget, which should make more TAM, more total
mhm.
addressable market, which means you sell more widgets. So then you get more revenue per employee. So then everybody wins. If the
Yeah,
employees are more productive, the company becomes more profitable, the economy becomes better. And all of that is actually not inflationary because part of what I just said was that the price of the widget goes down. So that's the Goldilocks scenario. And it's hard to achieve, although we might be heading into that with the robots and with AI and with everything else that we're talking about. We might be going into exactly that scenario. And actually, we've been in that scenario for 150 years. We've had the greatest increases in productivity in the history of the world over the last 150 years. So, but Tony Seba and others are saying we're going to be even seeing higher levels of increases in productivity.
that's right. In my mind, there's no doubt that humanoid robots and AI in general will allow an improvement in productivity that we can barely imagine today.
Right.
Yeah, that is definitely coming. Today, initial jobless claims, a little higher than expected. They were 231,000, up 22,000 from the prior week, and the expectation was between 212 to 214,000. Now, this number also is a little lumpy,
Right.
and on this chart, you can see if you seasonally adjust the number versus non-seasonally adjusted. So the green line is what's reported. This is seasonally adjusted number. It's not quite as lumpy as the blue line, which is the non-seasonally adjusted.
Okay.
So when you're looking at this, just be careful of what number you're looking at. You can see sort of post holiday period, the non-seasonally adjusted number climbs up, right? A lot of
Right.
temporary workers, so on. So, but even so, this is as high as it's been now since August of last year.
Right.
Um, which, again, perversely might be a good sign.
Right. Yes.
And this chart captures this, or this cartoon captures this nicely. The two parts of our K-shaped economy. The green line, okay. The red line, not okay. And that's how you can think of economic data, although sometimes the line going down actually is okay.
Yeah, no, that's when it gets flipped, you're like, okay, I'm trying to understand now.
That's right. And also the good news for the stock market is when we have periods when there's little economic data, that tends to be good for stocks.
Yes.
So in weeks where there is no economic news, stocks go up about 0.6%. Okay. In weeks where there is 1, 2, or 3 data points, you can see the stock market doesn't do as well.
Right.
So if you want a trading strategy, and I'm not recommending this, only trade when there's no economic data coming out.
Yeah, trade on the Friday before the week. So this week would have been a good week to trade because there's like nothing this week.
Nothing. Anyway, that's some great research from Bank of America.
Interesting.
Um, Mortgage rates. They went up, they came down, they went up, they came down, they're back up again, 7.22%. Again, as we've talked, this is still pretty reasonable in the long-term scheme of things, but nonetheless, it was a pretty rapid rise from
Yep.
high twos. And so people are watching this very carefully. And interestingly, it doesn't seem to be impacting home prices a whole lot. We've
No,
talked about this before, but the 20 city index is basically at an all-time high right now.
right.
There are a few locations that are down. Seattle's down 6% from its peak. San
Mhm.
Francisco down 8. Portland is down 4. Um, but for the most part, the ones in green they're sitting at all-time highs.
Right, right. And by the way, the mortgage rate, uh, I think I saw it yesterday, did drop below 7% again, just slightly.
Yeah. I'll have to revise my chart for next week. All right. One of our favorite topics is inflation. I thought this was a good cartoon. Inflation sent us. We're here about the rent. A couple of tough-looking guys
Yep,
knocked
yep,
on this guy's
yep.
door in apartment L6. But the good news for him is that the vacancy rate for apartments is actually
Mhm.
approaching the highest level in 4 years.
Yeah.
So quite possibly, apartment rents will be easing going forward.
So
Uh,
overall, according to Trueflation, according to Kathy Wood, according to some of the other people that we watch here, apartment rents have already, and even the Fed chairman has said that the apartment rents have flattened. Depending on whether you're talking about one-year leases and taking start dates as how you evaluate them, or whether you're looking at the average of what people are paying on any given day, the 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 this takes a while to show up though in the CPI, which will come out next week. And even the Fed chairman keeps saying, we thought it would show up sooner. I
Mhm.
thought that was odd that the Fed chairman thought that this was going to show up sooner, and he's got all the information. So ultimately, yes, we think rents will be a help with regard to bringing down CPI.
Yep, no doubt. No doubt. And also helping right now is used car prices
Ah, yes.
continuing to head back down. This is the Manheim Used Vehicle Value Index. Peaked out at above 250. This is the index value, and it's now down under 200.
Yeah.
Um, those numbers don't really mean anything other than that the index was above
Right.
250. Now it's down. If we break it out into price changes for the different classes of markets here, the total year-over-year change in mid-April 2024 was down about 13.7% for the total.
Hmm.
Luxury vehicles down 12.7, compact cars down 17, midsize down 16, pickups down 15, SUVs, CUVs down 14, and EVs down 18%. So EVs have gotten cheaper. That's great. And then non-EVs down 13.
Right.
So definitely a benefit there. So it's not just the price of new EVs coming down, but also used ones as well, making them more affordable for lots of people.
Right. I think there's a chance, at least, that this is also partially due to the fact that EV prices went up, EV
Yeah,
prices and used went up more during the pandemic, the kind of the post-pandemic period than the regular cars did.
that's right. So this is just kind of a self-correcting
Right.
mechanism. Now, I do have one really, really bad data point on inflation, and this is unavoidable, and this is shocking.
Okay.
For those that went to the Formula One race last week in Miami, the price of nachos, get ready for this, $180. Not 18, not 18, $180 for a plate of nachos. For the fruit refresher, $190. So let's hope that F1 or Miami is not, indicative of what's going to happen
What happened next?
to
I just
nacho
can't,
and fruit prices.
it's kind of hard to imagine anybody paying those prices. It was like, was anybody in line at this point? I can't even imagine.
Well, when you pay, $4,000 or $5,000 or more for your tickets, then I
Yeah.
guess what's another couple hundred for some nachos?
Yeah. Yeah. I think I'd go hungry until the race is over.
Yeah. I can't imagine what the drink prices were, but they were
Yeah.
off the charts too. Um, anyway, yeah, this is pretty painful. Um, so I'm sure the Fed chairman's aware of this.
Yeah, right.
All right. This is just a transitional cartoon. I thought I smelled CNBC, and the guy's looking at the bottom of his shoe. For
Yeah,
some
yeah.
reason I thought that was funny.
Nice.
All right. Last week we talked about Amazon, and we showed a chart how their long-term profits weren't really all that great.
Right.
Apple makes more in a single year than Amazon has made in its entire history. But maybe the worm is turning on that, and
Mhm.
Apple reported its highest operating margin ever. It's
Right.
moved to about 10%. So maybe, just maybe, all those investments that Amazon's been making for the last 30 years are starting to pay off, and we'll start seeing it in higher profits. Or maybe not. Maybe they'll
Or maybe
find
not.
something.
Yeah, maybe not. Yeah.
Yeah. This is also interesting. 25 years ago, Walmart's revenue was 171 times higher or larger than Amazon's.
Hmm.
20 years ago, it was 45 times as large.
Hmm.
10 years ago, it was 6 times as large. 5 years ago, it was twice as big. And now it's only 10% bigger.
Yeah.
Now, Walmart and Amazon aren't really directly comparable. Amazon has the cloud business,
Right.
which has 94 billion of revenue. So it's a big contributor to Amazon's total
Sure.
revenue,
Sure.
growing very, very rapidly. But still, this is interesting how Amazon is catching up to Walmart.
Yeah, and Walmart, again, for I don't know how many decades, has been the highest revenue producing company in the world.
Mhm.
And so interesting that Amazon is catching them, but just a couple of years, Tesla will blow past all of them. So yeah.
That's right. That's right. Yeah, that'll be a fun chart to show.
Yes.
Now, all is not lost for Walmart. This is kind of interesting. If you want to walk 9 miles a day and make $250,000 a year, Walmart has your answer. So if you want to be a store manager at Walmart, some are now making more than 400,000 a year,
Hmm.
and they have 4,700 US store managers.
Yeah.
Now, it's a pretty tough job, but the pay is pretty attractive for those that can handle the work.
Right.
So don't give up on Walmart yet, and particularly if you're looking for a job, might be an interesting place.
And especially if you want to take off some weight by walking a lot every single day.
Well, that has some benefits for
Right.
sure.
Yeah.
Yeah, absolutely. Um, Back to Amazon, back to their cloud services business. This is just a couple of data points. The company Eaton makes backup power protection and distribution equipment for data centers. They had expected the market to grow at a 16% compounded rate between 2022 and 2025. They have now increased that to 25% expectation.
Hmm.
So they expected 16, they now expect a 25% growth,
Right.
right? This is for backup power protection distribution equipment for data centers, meaning the data center business is stronger than they expected. This is from Dominion Energy in the bottom. A single data center typically has demand for 30 megawatts or greater. We're now receiving individual requests for demand of 60 to 90 megawatts or greater, and it hasn't stopped there. We get regular requests to support larger data center campuses that include multiple buildings and require total capacity ranging from 300 megawatts to as many as several gigawatts.
Wow.
So we've been talking about the expansion of the data center business and
Right.
the need for data centers. And if everything is going to be moving to AI inference, then yes, this is going to continue.
Yeah. Lots
So
lots of business for superchargers. I'm not superchargers, mega chargers.
mega
Mega,
chargers,
yeah, mega,
um,
mega
mega
packs.
packs,
There
mega
we
pack.
go. Yeah, there we go.
Yeah. But also, utilities are seeing the opportunity,
Right.
the equipment makers, all the suppliers to build these data centers, their businesses are going well. So this is a long-term trend as well. It's kind of interesting to watch. All right, another transition. Apparently, he stopped watching CNBC. And look how happy he is. Yep. Okay. Central bank policies. We had two cuts this week. Swedish central bank cut rates and Argentina cut rates. Now, the Argentinians cutting rates may be more hopeful than anything. They have a central bank rate of 50%, and they have year-over-year inflation of just under 300%. But wouldn't it be nice if they could turn things around for once?
Well, it sounds like with this new guy that Elon just thinks butter doesn't melt in his mouth. I forget his name right now, but apparently he's doing a huge number of things to cut that inflation number down. Fired a bunch of government employees.
Mhm.
Love to see that happen in the United States, but maybe this drop in the central bank's interest rates is reflective of the fact that the the inflation rates are starting to moderate a bit.
Yes, and they need it. They need it badly. Now, I understand today the Bank of England decided not to cut rates,
Hmm.
but the expectation is they will cut in June.
Okay.
So that would be certainly a major central bank cutting rates
Right.
as well. So we'll continue to watch this chart for the green cut column
Hmm.
here,
Hmm.
the last move. All right. What's the average interest rate the U.S. Treasury pays on its debt? Well, today that's about 3.2%.
Hmm.
And you might say, well, that's not bad,
Yeah.
right? I mean, it was 1.6,
Right.
but 3.2 sounds pretty good. I mean, if I could pay 3.2% on debt, that would be pretty cool,
Yeah.
right? And the problem is this, that it's over $1 trillion
Yeah.
and it's gobbling up almost 4% of GDP. So, I guess you could say that's not too bad, but it's $1 trillion.
It's $1 trillion. $1 trillion here, $1 trillion there.
I guess now that we're talking about quadrillion,
Yeah.
a tip to our Thursday show, what's a trillion?
Yeah. Yeah. Well, again, economists are fond of saying that you can, in fact, work your way out of debt. So you can, if you have enough productivity, if you
Yep.
have enough people working, if you have enough people paying taxes, you can eventually work your way out of debt. We did that, of course, famously in the 90s with Newt Gingrich and President Clinton working side by side to get the at least the annual deficit eliminated for a few years. But it's been a hard thing to get.
Yeah, I never would have said it, but we kind of long for President Clinton again. We
Well,
we
no,
missed this.
I'm longing for Newt Gingrich, not for Clinton.
I'm just trying to see if I can get a rise out of you on that one. What happened to Apple? Says the guy on the left, and the guy on the right says gravity.
Right.
I'm assuming he's not talking about Newton,
Yeah.
the
Yeah.
company.
Yeah.
But interesting though, although this cartoon might be talking about Apple's stock price, here's another thing that gravity applies to, which is kind of interesting, and that's shares outstanding.
Yeah.
Okay. So Apple over the last decade has bought back 625 billion in stock.
Man.
That's greater than the market cap of 492 companies in the S&P 500. Not all of them combined, just
Right.
just
No, I understand. Yeah. Yeah.
right. And so the blue line shows the shares outstanding, which peaked at over 25 billion and is now down to 15 billion. So they've acquired 10 billion shares. And you can see that the amount of share buybacks has gone from 0 up to 81 billion over the last 12 months
Right.
in share buybacks for Apple.
Absolutely amazing.
So they've put a floor under the stock in some sense. They've created a demand for their
Oh,
own
yeah.
stock to buy it themselves with
Sure.
the cash that the company's earning. So this is certainly one way of returning cash back to shareholders without
Mhm.
paying a dividend,
Right.
right? You don't see it, you don't receive it, but you see it in, rising stock price
Exactly.
over time. And for the S&P 500, Goldman Sachs estimates that for 2024, we're going to see about 900 billion share buybacks and over a trillion for 2025.
Hmm.
Apple obviously being a major part of that, but still, there's a lot of other companies doing share buybacks as well.
Yeah. So if we think that through for a minute, I'm having a hard time doing the mental gymnastics in my head. Since since Apple has purchased more than 50% of their shares outstanding from several years ago.
Not quite 50%, 10,
Enough.
10 out of 25. Yeah.
Okay. Okay. 10 out of 25.
40%.
40% of their shares. So does that make it, if they just continued on this track, they could go private just by buying back shares every year?
Yeah, it'd be interesting to see how that works, right?
The price of each share would keep going up a lot.
Yeah,
The
the
closer
amount
they
of
get.
81 billion is going to buy the fewer and fewer shares as we go along,
Yeah.
right? Uh, I guess at some point you do run out of shares, though,
Yes.
potentially.
At some point. Yeah. Yeah.
Yeah.
It'd be interesting.
Look, there'll be one shareholder left standing,
With and that one share will be
one share.
worth $1 billion or $100 billion or something.
I am the last shareholder
Right.
of Apple. I'm not
Right.
giving up this share. Yeah. I guess though, in order to entice people to part with their shares, the stock price would have to go up enough that
Yeah.
people
Yeah.
say I'm
Yeah.
willing to sell.
Exactly.
Yeah. Yeah, there's probably a limit to this game at some point.
Maybe. Maybe.
Yeah, you get to the point where there's no willing sellers.
Right.
Um, okay. Touching on another topic we talked about last week.
Hmm.
You actually sent me home with some homework, and I'll
Ah,
talk about that in a second. But this also kind of is on the productivity and the GDP equation side, right? And the one problem we have with higher productivity is we have fewer people being born, right? And we're going to have a declining population in the world.
right.
So there's less consumers. So the concern is over time, if the world continues to see a massive decline in population, there's fewer and fewer consumers. So
Right.
while we have all these bots making things, who's
Yes.
going to buy it,
Yes.
right? How many TVs do you need? How many watches do you need? How many iPhones? Well, if we already have two each, how many more do you need,
Exactly.
right? So anyway, here's for the US fertility rate in the US 2023 was 1.6, which is, I think, the lowest we've ever seen.
Right. Hmm.
Okay, and replacement levels at 2.1.
Right.
Now, we talked about this last week. This is a new chart. This shows US births versus deaths.
Mm-hmm.
Births last year was 3.6 million, down from 4.3 million in 2007. And deaths conversely are going up. Now, there was a COVID spike,
Right.
but right now deaths over 3 million a year.
Okay.
So at some point these lines will cross,
Right.
and they have already in many countries. Um,
South
so
Korea, for instance. Yeah. Japan.
Italy, Japan, I think, as well as a bunch of them. So it's not just less people being born, it's also more people dying.
Right.
So you can have population decline very quickly with both of these trends in place. You asked me about Singapore.
Yeah.
The fertility rate in Singapore the last year was less than 1,
Wow.
0.97. Now, the year before was the year of the tiger, and typically you can see on this chart that's a low year for some reason.
Hmm.
People don't want to be born in the year of the tiger.
Okay.
They want to be born in the year of the dragon. And the good news is, Randy, this is the year of the dragon,
I see.
2024. So we expect a bump in Singapore this year.
Are many bumps. Yeah.
Many bumps.
Yeah. Many bumps.
Exactly. Sorry. Yes, I misphrased that. Yes, good catch. So Singapore and South Korea are in pretty dire straits.
Yeah.
And in Singapore's case, they are throwing money at people that have kids.
Yes.
They're offering, in some cases, a year's free rent. There's subsidies for preschool. There's endowment funds for education. There's all kinds of stuff that they're trying to incentivize people to have children.
It's not.
But it's not working.
Right.
It's not working. Yeah.
Interesting.
This is China. This is from Charlie. In 1980, China institutes a one-child law. Fertility rates 2.7. In 2016, they moved to a two-child law. Fertility rates 1.6.
Right.
2021, they said, okay, you can have 3 children. Fertility rate goes down to 1.3. And in 2023, they say no limits. Have as many kids as you want. Well, fertility rate's now 1.
Wow.
So what they're doing is not working.
Right.
Just lifting the
Right.
caps
Right.
doesn't work. So I don't know what will work. If money doesn't work and if restrictions don't work, lifting restrictions don't work, it's going to be a problem. Speaking of China, this is related. This cartoon is showing the bear holding the Starbucks cup with the Starbucks logo doing its best Edvard Munch impression of the screen. Starbucks had weak numbers out of China, and their expectations for demand in China is coming down as well. It's a very competitive coffee environment in China,
Mhm.
and you can see their stock has taken a bit of a hit.
Yeah, I see. It was 10% in one day, right?
Yeah, yeah. The red line on this chart, by the way, is hard to see, but it's the earnings expectations over the next 12 months. And so as you can see, the stock price generally follows
Oh,
earnings
I see.
expectations,
I see.
and both coming down. Complete transition to nothing in particular, but I thought this was interesting. In Osaka, the international airport there has been responsible for no lost luggage since it opened 20 years ago.
Ha!
Not a single bag has been lost. Now,
That's amazing.
every airport in the United States needs to go to Osaka and
Yeah.
find out how they did this,
We need to find that out.
Huh. That's
right?
crazy.
So pretty amazing. And their goal is to get the bags to passengers within 15 minutes after the aircraft arrives. They place suitcases on conveyor belts so their handles face towards the passengers so they can easily pick them up. Like they actually think about
Wow.
people retrieving their bags. So amazing. I wish US Airlines would do some research on this.
Interesting.
All right. EVs.
Well, you know what we're going to do here? We're going to take another one of those breaks.
That
And
sounds great.
that'll give me more content for this weekend while I'm traveling. I guess I'll be, by the time this one shows, the next one shows, the EV one shows, it'll be Sunday. I'll be in New York City checking out the Met or something. I'm not exactly sure exactly what day what, but let's take a break. And as Cern, as always, thank you for putting all these charts together, and we will see you in a minute.
Sounds good.